Hey, what's going on? It's Nick here from Ways of Wealth. Thank you for tuning in. It is week 32 of the market recap. For all of you that are coming back to my channel and returning subscribers, welcome back. You know what the deal is. For all of you that are brand new, welcome to my channel. We discuss key events that happened in the market over the past week. So I'd like to ask you a huge favor. If you learned something new, smash that like button. It helps my channel grow. And please, if you enjoy the content, if you find it valuable, hit that subscribe button, turn that notification bell on. I would greatly appreciate that. We have a great episode lined up for you today. We're going to be talking about why people are investing in gold. We're going to be talking about the benefits. We're going to be talking about the recent run it's had. Is it little too late, or is there still room left to go? We're going to be talking about that. And besides jewelry, what other ways, what other vehicles can you use to invest gold? So stay tuned. We got a great one lined up for you. All right, let's dive in. As I'm sure a majority of you are aware, there seems to be a handful of winners that have come out of this pandemic. I'm talking about big tech. I'm talking about the FANG stocks, the Facebooks, the Teslas, the Netflixes. You know them, I know them. Everybody knows them. They've kind of matched up to the stock valuations that they were at pre-pandemic and have taken the pandemic in stride. They've hit all-time highs. It seems like every time I look at these stock charts, they're hitting new highs. So that is a great sign, but it seems like the headlines have turned a different tune. We're seeing more about gold, and if you haven't already known, they're also a big winner this year. So we're going to be breaking down the recent headlines there. While yes, Apple may be up 55% year to date, and you might be reaping those benefits, gold is not too far behind. The precious metal, which is measured in the price of an ounce in US dollars, is up 34% on the year. So the price of gold climbed all the way this week to a high of $2,063 per ounce. It consolidated a little bit on Friday. It closed at $2,046 an ounce. But at the start of 2020, which was a way simpler time, it opened up the year at 1,518 and has climbed ever since. Why is this happening, and have we missed the bull run? Is it too late? Before we discuss the benefits of gold, let's go over a key moment in history for the precious metal. Prior to 1971, the US dollar was backed by gold, and it was a term that is known by the gold standard. So what does that mean? That means that the paper currency could be converted for ounces of the shiny commodity, which means that the country could only have in circulation the equivalent amount of gold that it had in its reserves, which would make the quantitative easing happening today essentially impossible, as printing money would have a direct correlation to the amount of gold we are mining. That is why President Richard Nixon removed the gold standard on August 15, 1971, and rather than being backed by gold, it is now backed by the government. This is referred to as Fiat Currency. When this happened, gold was trading at about $43 an ounce. So if you think about that and you were a time traveler and you sent yourself back to 1971, ask yourself one question: would you rather have $43 or would you rather have an ounce of gold in that time? Not to forget, here's another fact, that the US dollar has decreased 96% in value over that same time frame. So what is the point? The point is that gold is used as a store of value. It does a very good job of continuing its value year after year. As of late, we have seen weakness in the US dollar, and this is directly correlated to the Federal Reserve and the quantitative easing that's happening right now. With the Fed's balance sheet soaring to over $7 trillion, with the mass amount of printing that they have done to keep the economy afloat, It has caused the supply of dollars to increase and therefore reducing demand. Now, this has essentially resulted in a falling dollar. For those investors holding on to cash and not willing to lose value of that cash, they turn to gold to further protect from losses. This event is extremely similar to the Great Recession, where gold nearly tripled from 2008 to 2012. So if you believe that more stimulus is required, then the theory is that the US dollar will continue to lose purchasing power, and the gold instrument will be a great vehicle to help maintain the value over the next X amount of years. The efforts put forth by Jay Powell and the Federal Reserve by lowering interest rates and the quantitative easing is obviously meant to stimulate demand. But what is actually happening is that there's some inflationary measures that are coming into the market. Now, what is inflation? Inflation is when the prices of goods and services continue to rise, and that obviously means that our purchasing power is continuing to decrease. We can't buy as much as we used to with the same dollar. Not to mention that the conflict between US and China is not helping the matter, as tariffs will only further escalate inflationary concerns. So the tariffs will add to the prices of goods that are being imported, and obviously the end user will have to pay it. But this will also affect investors that deal in the treasury markets. The benchmark 10-year treasury yield is just over 0.5%. What does this mean? It means that your money will yield you 0.5% over 10 years if you invest in this bond. Doesn't seem too attractive. As the Fed has already cut rates to all-time lows, it doesn't give these treasury bills much hope if there is any other further downside, because the Fed can't lower their rates any lower. And then if you factor in inflation to the real yield, which factors in inflation into it, it actually makes the yield turn negative. So that actual, after we've accounted for inflation, yield on the 10-year bond is negative. Does that actually make it a great investment instrument? If there is a second wave and stocks do happen to fall off, the theory is that these bonds do not look like a great investment tool. With already low yields, and obviously you factor in inflation and they turn into negative yields, the Fed can't go any lower on the rates. These investment vehicles do not look like the appropriate place for investors to head to. That's where gold steps in, and instead of these bonds as, portfolio protection, these hedge fund managers, institutional investors are looking at gold as a protection and a hedge against a downfall in equities. So all in all, I feel like there is still a lot of room left in the tank for gold to run. And if you look at the inflationary measures that are going to come, if you look at the treasury yields that are at all-time lows, if you look at the current economic situation, it almost seems like a no-brainer. But this is obviously my own personal opinion. I definitely suggest that you do your own research. But if you were to look at names and you are interested in investing, what I'll do is I'll share with you a few names. So the first place that I would start looking is at the gold bullion. It's a little bit more of a conservative view on a gold play, and you can look at names that trade in the US, GLD or IAU. If you're in Canada, you can look at CGL. You can look at, there's a few different products on the Canadian side. But if you're looking for a little bit more of a leverage play, if you want to, if you're super bullish on gold and you think that it's still got a lot more to go, you can play the miners. You can play the individual names, the Kirkland Lakes, the Agnico Eagle. You can play ETFs that combine a bunch of the miners together so you don't miss out on the winners, and you can hedge against potentially the losers. And if you are super, super bullish on gold, then it's typically said that silver trails. So if you want a super leverage play, look into silver. The best way to play it is probably in the ETFs. All right, and that is it for this week in the market recap. I hope you enjoyed the episode. I hope you learned something new. Again, if you did, smash that like button. It helps the channel grow. Don't forget, if you haven't already, hit that subscribe button, turn that notification bell on, because we do this every single week. I hope you have a great week on the markets. Happy trading.